All right, all right. So, welcome to episode 4.
4 already?
I know, right? We're just like cruising along with this podcast.
That means we started this a month ago already.
Yeah, about a month ago. All right, yeah, let's really get serious. So, we're going to talk about the fundamentals of trading.
Gotcha.
So, like, what is your elaboration when it comes to fundamentals of trading?
I mean, when I'm looking at fundamentals, I'm thinking basics. I don't want to make this too hard.
Yeah.
So I'll use a support resistance, a trend line, and then maybe just certain things that I may see within candlestick patterns.
Yeah.
Outside of, let's say, morning, evening stars, or the bearish and bullish engulfing, I kind of look for spaces in between candles too. I mean, because to me, price has to fill at some point.
Yeah.
So sometimes when a candle will close and the next one opens lower, thus creating a space in between, that candle, there's something that has to come back and fill that up sometimes. So I got to keep that in mind, that price needs to actually touch that area that it hadn't and it completely missed, and turn around and fill it up. So if I'm using, for example, like what was it this morning, we had the US 30, it dropped, but there came a space and then it started coming back up again.
Yeah.
Same thing with the US dollar. The US dollar was the cleanest one. So kind of looking at that, I kind of look at those basics and kind of base off my trades looking at those specifics, because I don't want to get into too much. I mean, people use the fibs as well for those certain levels, but me personally, something that you had taught me, I use fibs for entry. That's about it, because I kind of think of myself, I want to be that institutional trader.
Yeah.
And a lot of times those numbers within a fib will actually be recognized by not only retail traders, but by institutional traders. So you get your fake outs and everything like that. So I kind of keep it, like I said, basic trends, support, resistance, looking at candlesticks, and that's pretty much basically about it. Like patterns.
That really, I feel like a lot of people, if they really took the time and learning just to complete trade naked, I know a lot of people have amount of confirmations when it comes to trading, having the RSI or having the MAG ACD, all these confirmations. When I could talk about how I'm looking at the chart, I want my chart, I'm looking at the charts completely. If I'm encountering a beautiful woman, right? You want her to be clean. You want her to have all these expectations on what you're looking at it, right? So I don't like looking at it like a messy chart,
Right.
It should be really clean, simple, straight to the point, and, having you to break it down, right? If it's not simple for you, then, you really need to keep studying and, completely back testing. Because learning the fundamentals when it comes to trading, it plays a very important role, but also being an institutional trader and knowing, following up with the news. So if you guys are not aware, Market Watch, I know you have several websites that you could even drop. It's just about learning, how the interest rates are played, focusing on currency pairs that actually move during those rates. So a lot of people really don't focus on that aspect, and then they wonder why their accounts are being blown left and right. Perfect example, just this morning, very volatile, during New York session. Once it opened up, we had, gold dropping, going to hell. We had US 30 dropping as well, and people would be like, what happened? You want to keep being more knowledgeable and keep wrestling what happened, what caused that, and then you be prepared for when it occurs again.
Well, and the irony of, you're talking about gold going down and US 30 going down, it was funny because the USD news that came out was actually positive.
Yeah.
So it's those are the type of things that actually you have to consider for retesting common prices.
It came out positive, but if you look at the market structure of where US 30 was at, it was a completely new high, and it had to come down. There was no way it was going up.
Exactly.
So if that's where, a lot of price action comes into play, because if you follow where the market structure is always going to win, So if you're seeing where the market structure is at, then you're always going to capitalize and not lose. So and then now it's just, where do I put my stop profit if the market decides to go sideways, you know. So then you secure profits then rather than nothing.
Right, and if you don't pay attention to those fundamentals or those basics, or even, and this is a big reason why I like the whole naked trading process for common prices and the pullbacks, higher lows, lower highs, etc. A lot of people might have considered, oh well, USD pairs are going to be buys, when in actuality they were sells, and everybody would have hit stop loss this morning, right? So, but by seeing those basics and seeing those resistance levels and how everything rejects, and keeping those basics in mind. Other individuals, the ones that actually, prosper out of the trades, they see that and they're like, oh, well, this is something that needs to actually happen. And it dropped. Everything went complete opposite of what the news did. It recovered, but still, a lot of that may happen because like those institutions turn around and say, well, it's expected that these are going to be buys. We're going to make them sells. Yeah. Because that's the way the market needed to go.
Yeah. And it feels good, like when you're starting to learn, like not like every new incoming trader is going to be like, all right, I need to know these facts, because a lot of people really don't focus on that. They're first, of course, you're developing and try to apply what you're learning and focusing of the market structure, which a lot of people do have hard times to determine if it's creating high highs or high lows, when it's a trend decided is losing its momentum, where am I looking for a price rejection at. So like you're putting all these, like I would like to say, like you're adding all these tools, you're adding more weapons into the charts, having it naked completely and able to read where the trend is going, knowing where it's going to end, because overall, that is the most important fact. If you know where the trend is going and you know where it's going to end, perfect. Now you could focus on the next trade setup, focusing on where is the trend, all these little components, and then adding in with the fundamentals, and then into well, I can't even speak right now. The international news. Whoops, my bad. So like that plays like a whole important role. So then you add that all together, and it's just like, man, trading becomes so simple. Like, it's like you're eliminating the greed out of it, and now you're just applying with the knowledge that's being sent. It's there, and then you just reap the benefit out of it.
Yeah, and I mean, it comes with confidence. That feel good intuition that you have, that's the confidence that's being built up. Because you don't necessarily need 10, 15, 20 different indicators. Like you said, you're like a clean chart.
Yes.
The only indicator that I use actually on TradingView is the 66 EMA, if that. Yeah. It's the only indicator that's on there. And I mean, I tend to follow it quite often, just as like it's probably like, if I'm going to list it in number format, it's probably like my 8th confirmation. I'll use other things, including similar pairs. So like if I'm looking at USD pairs, I'll look at like how EU and GU, UJ, how they're supposed to move, and give me my confirmation to say, okay, well, now I kind of go with where I originally thought with the XY that's going to be going up or down. So I'll use those as confirmations. But when you can sit there and use all those basics and gain that confidence, it's a great feeling in that sense, because where, like you said, market structure is going, where a trade is going to be going. I told you that story today where there was earnings calls yesterday. Yeah. And there were people at my job that were worried because our stock was dropping. And so I looked at TradingView and I'm like, oh, well, no.
Yeah, but it was only dropping to create, high-low positions.
Exactly.
So for people that are traders, they're like, oh, this is beautiful. Like, this is a great time once we see a rejection and capitalize on the momentum.
And the irony of it was when I pulled it up, I marked a resistance line and it had literally rejected off of that resistance line during the earnings call. Yeah. So then it just dropped. And then when I marked a trend line, it literally hit that trend line perfectly. And I've got people that are like, oh my gosh, what's going on? Yeah. And I'm like, look at this. This is what's going on. Right now, if you wanted to buy, you can literally buy right now. And you're going to end up being at a good point. You're not going to be buying high. You're going to be buying low. That's at the lowest point. Yeah. So, there was some people that when I was talking with them, they felt a little more comfortable, a little more confident because they're holding on to their stocks. They were like, oh, I wish I would have traded it, or I wish I'd have sold it. Now they're like, oh, okay, I'm glad I kept it.
Yeah.
Because that makes a lot of sense. So, but I mean, those were basics. Those were basic fundamentals and common price, knowing that it has to come down.
Yeah.
And again, those support and resistance areas.
Yeah. So like, I think we had like 2 questions here on my live. So someone
Shout
was
out
saying,
the live.
I think it's Oliver. Yeah, he actually signed up actually like a few days ago. He's saying that so fundamentals are, support and resistance, trend lines, candlesticks, patterns. Candlesticks, patterns, you don't need to know all of them. You just need to know the most key ones that are really happening in your market structure, right? So I don't really like to really rely on using our trend lines because, I'm really focusing on the market structure first and then seeing where price is landing on, the previous, rejection. So, and then it's just like, all right, perfect. Following the trend, keep it as simple. Like I don't use any indicators at all. I used to be that kind of person. It was like, all right, man, I'm gonna wait for my moving averages to cross, or I'm gonna wait until it comes into, a nice support, and then I was not losing track. I was losing track if it was still an uptrend or a downtrend. With all these indicators I had on displayed on my chart, and then, from time, when you keep back testing, you keep applying, all of the knowledge, and then you're gonna start removing those indicators because indicators, we all know they lag. So if I'm looking at someone's chart, you could tell by, their experience, just by having their chart being displayed because it shows you how long you've been trading. If I'm looking at someone's chart and I'm seeing hella indicators, it's just like, whoa, you need to slow it down there. Like you're missing the bigger picture to this because you could actually capitalize on knowing where the market structure is going to be rejected in and capitalize a whole trend. That's what everyone wants. That's everyone's goal. We want to capitalize the whole movement, not just like, getting a little 50 pips. No offense to any scalpers, but I'm not a fan. You're a scalper trader, I'm sorry. Like, cool, you got high balance, you're looking for 50, 20 pips, cool. But me, I'm trying to rob the government.
Right.
I want the whole damn cake.
100,
I'm not
200, 300 pips.
Yeah, so I want those kind of moves and be like, all right, I want to sit in a trade, put my stop profit, and then, go on and within my day. The only time I'm applying so much time on the charts is back testing. I'm not sitting there like monitoring my trades. Like, no. I like to trade in the higher time frames. Good. I'm a swing trader, and then capitalize on momentum and then keep it simple. So not making it complicated. You shouldn't. Trading requires a lot of patience anyway. So, let the price do its thing. It's like playing fetch with a dog. You're throwing a bone. He's going to grab the bone. He's going to come back. So that's how I look at the market. It's like, all right, you're going to throw the bone. It's going to get the bone. It's going to come back. So, right. So price is going to come back to where you want it, capitalize on it, and you're done.
Yeah, and speaking of the beginners portion, when you can tell how many indicators somebody has.
Oh yeah,
I remember using three. I had 3 EMAs, the RSI, the A.
And then don't you think to yourself like, damn, like this is taking a lot of space. Like you try to look at a whole chart and it's like, all right, okay, I could barely see the candles now. I have 3 indicators. One is pointing up, one is pointing down, and one is probably just consolidating. And you're like, all right, so I got to focus on something that's lagging first for me to get a confirmation on an entry, right? So if it works for people, then yeah. But, we all know that the best traders, are not using any indicators, know. So.
Well, that's why I'm down to one indicator. And on
simple.
my MT4, I still have the RSI, but I only literally have that on there to see when something's overbought or oversold.
Yeah.
It doesn't even necessarily matter. I've seen where gold spiked up last week and it went oversold, and then it went even higher than oversold.
Yeah.
And I'm like, all right, well, the RSI, if someone's
because
it's not even going to matter at that point.
So that is where we're having the fake outs. Know, so the fake outs are just giving you a better confirmation to not get in that trade. So if that happens, you're like, all right, perfect. So we're waiting for a bigger momentum. That's how I look at it. And people are like, oh damn, I got caught in the fake out, and it's just like, all right, so why did you get into that trade?
Right.
You know, like if it's in a consolidation area after a big momentum, it's gonna consolidate. It's not gonna just start moving out of nowhere. It has to take its time and build momentum first.
Right.
So,
I think for those that do use indicators, I mean your EMAs are good. With the Ichimoku, the cloud.
oh yeah,
That thing is actually pretty cool. But when you can use them correctly, like if you don't overcrowd and overcomplicate the trade, and you literally only trade off of that,
yeah,
then you're okay. But if you sit there and start mixing, it's like using Confluence the wrong way.
mm-hmm.
When you're using Confluence the wrong way and you're taking different points and different strategies and putting them all together,
Yeah.
at some point you're going to end up hitting stop loss no matter what. So it's the same thing for me, like with indicators. If you have far too many indicators, if you're using more than one or two, then, I mean, at that point, you could be crossing what those indicators are actually used for, and it could throw your whole trade off. So, I mean, that's another reason why I kind of, feel better trading in the naked style, because just using past to predict the future, knowing where common prices are.
Yeah.
And I mean, even that I use that. I'm looking at that right away. Common zones.
Yeah.
This is where price goes.
Yeah. And then I just had a question, book recommendations. Naked Forex. It's a great
Straight
book. You could get it off, Google. There's a PDF file. It's free. Get the free version, if you want to, I like to still be cheap. It's just the best route.
Free 99.
Free 99. So get the book Naked Forex if you guys want to learn how to become a naked trader. It actually opened my eyes completely and what I was really missing out on, what I could potentially be making. And I love that book. Everyone that hits me up about Forex book, like that's the only book you need. Like,
and we actually have one of our colleagues here that actually just finished it recently.
So, like, tell me, like, how was your experience when you read Naked Forex, right?
Yeah, it was.
Yep. All right. Yeah, he's coming. He's coming. So, he a little camera shy.
Go ahead, bring on Marcel, special guest here.
Yeah, it was just very thorough, and like what you guys were pointing out, that sometimes the indicators can just overcomplicate trading, already as complicated as it could be. And with the lag, that you'll miss setups, you'll miss the overall trend, and you'll miss the movements that you're actually trying to capture. Another thing that it greatly points out that we were just talking about, like the sleep limit, like the risk to reward levels, and how much you're willing to risk, and what are you comfortable risking and going to sleep and not having to check your MetaTrader 4 or check your charts every 5 minutes because you're afraid you're going to margin yourself out, or you're going to hit your stop loss and blow your entire account.
Yep.
Yeah.
So after reading that book, if I were to look at your trading view right now, what would you say? Like, have your indicators changed? Have you eliminated some of them, or do you still?
Yeah, so I was using the MACD. I don't use that anymore. I don't even have the RSI on my phone MetaTrader. All I have I have the 15, the 6, and the 66 EMAs. I think that's all I have. That's it.
And that helped build up a lot of confidence, didn't it?
Quite a bit. Yeah.
Good. That's the whole point. Making it as easy as possible for yourself to get into that best trade possible, and kind of just taking it from there. If it hits stop loss, it hits stop loss. You just go back and find out why.
That's just a part of the process.
Yeah.
You gotta love taking the L's. Like, I know a lot of you guys are not gonna agree with me, but for the people that have been trading for a while, they know what I'm talking about. Like, you learn from all of your failures. Like, there's been a lot of failures of losses that I've taken, and I just completely just reflect off it and back test and then keep it moving. So I do take it out. It's like, great, guess what, I have a skill set that I can make this back, right? And a lot of people, I'm not gonna really throw shade or anything like that, but for people that just like only just want to be signal takers, and I could be a great example. I was that kind of person, just only taking signals. I was like, yeah, it's great, but I always wanted to have like a confirmation of why am I taking it. Do I agree on seeing this person's analysis? Like, if you don't agree, cool. At the end of the day, it's an idea. So like, if you want to take your skill to the next level, don't be a professional signal taker. Be a professional trader and apply the knowledge
Yep.
that is everywhere. Like you could apply if you have a right mentor that's willing to take the time and show you it. Then there really isn't a limit. You're just still obtaining knowledge and still applying it. So, yeah, because like, you want to be the best, for yourself, because at the end of the day, it's just a vehicle.
Well, and I was one of those people that's like, hey, I want to take those signals. I'm gonna take those signals. I'm on Telegram.
Well, we all took signals.
Right.
Like no one can say like, yeah, I learned and I never took signals. Like no, like it's cool. Like if you agree with it, great. But don't be like, all right, it's a signal and you're forcing it. It looks spicy. If it agreed with the knowledge you applied, he's always laughing when I say spicy. If you agree to it, and then yeah, great. And that's the focus. Why Blue Capital is what Blue Capital is, just to give you an idea. If you agree with it, take it. We also had another question.
Well, see, it's hard to kind of know to agree or to disagree with it if you don't even know those basic fundamentals.
Yeah, so that's why it's good to practice on a demo account.
Yeah,
like practice as long as until you get comfortable of what the terms are, and knowing what the pending orders are, all those stuff. Like like you don't want to come in and be like, all right, so this is a buy or sell. Like even in our members chat, like I refuse to answer those kind of questions because that just tells me you haven't applied anything and you just want to, go ahead and be a professional signal taker. So like, it's only so much it could take you. Like, a person could catch, 2,000 to 3,000 pips every week consistently. Yeah, your account is grown, but then you start to look at your account and you start to look at yourself and you're like, okay, if he's not giving out any calls, then I'm completely. Can I curse on here? completely fucked, right?
Yeah, there you go. Hey, yeah, it's our podcast.
Yeah, so like,
say how you want.
So you're completely fucked, and and then you're just like, damn, like now I need to really learn. Like I need to learn this, like so not only for myself, but for the people that want to learn this. I know we had a question here. I always get this question like every other day. Someone was like, what is your opinion on IMO? Well, I'm not going to answer that question because that is nothing to do with this podcast. All I could say is that if you find value with them, great. If you don't, it's still great. There's different sources that you could learn the skill set. So I'm not here to throw any shade or anything.
Well, not just that, but it's like a cell phone service. It's like saying, "Oh,
yeah,
well, it's like, what do you feel about T-Mobile compared to Sprint?" It's just another service.
We have Verizon, we have Sprint. So, like, when you ask kind of like a biased question, I'm gonna give you a biased answer. So, like, that's just what it's gonna come to. But I really hit the nail on talking about fundamentals. Just applying it. Because apply it until you get sick of applying it. Well,
and then you apply it some more.
Yeah, and then you apply some more. So it's just like how you want to be the best basketball player. What are you going to do? Apply the skills, right? Apply dribbling the ball. Apply getting back on defense. Like all these little things, So it's just like Forex is just great examples to compare to a lot of things. So it makes it understand for other people. So it's like, all right. Okay, this is what it is. So,
but it can do a lot. I mean, even as a vehicle, like I think we talked about in the last episode, we were talking about growth. I mean, it teaches you so much, just even outside of just the trading basic aspect of making money.
Yeah,
it teaches you a lot just in general.
Yeah,
we've talked about patience, we've talked about controlling emotions, we've talked about growth. We are now talking about not making things complicated. And I mean, if I get deep here like I normally do, you can apply all those to your normal life. Don't make things complicated. Make them as easy as possible.
I know. Life is already complicated as it is, so you don't want to be coming in a chart and be like, oh, all right, your first month in, I still don't get it. Like,
you're not, and you're not going to. Like, you're not supposed to. You're supposed to take the education opportunities, the outlets that you're given,
Yeah.
and soak that information up and then apply it how you feel you need to apply it. You're not going to be the greatest overnight.
No. We have Sunil. Hey, how's it going, my guy?
Big Sunil, what's up, dude?
Yeah, he said that I like these podcasts. Appreciate you, brother. What are the same exercises to get better at learning market structure? I would honestly say, that's actually a good question. Identifying your highs and your lows. Like, you got to have that like down pat. If you do not know these, you are going to struggle in trading every single time, because we're taught to always sell high and we'll always buy low, right? So if you're not able to identify your highs and lows within the trend, I highly suggest that you go back and apply learning the market structure of where there is creating a high, where it's creating a high low, is creating a on the downtrend, it's creating a low low, it's creating a low high. So those are major components when it comes to market structure. And you're never gonna lose. You just hop on the live. His name just pops up. That's something that Michael does too. Like,
Yeah, I think identifying ceilings and floors, support and resistance is huge as well. Because if you know where it's going to be going, at some point you can wait. It teaches you patience. So,
and it's definitely going to test you.
Yeah,
like,
absolutely.
It's definitely going to test you. So like, you're going to be like, oh, is this becoming a resistance? And you start talking to yourself, and the person that you're looking at the charts, they're like, yo, this guy sounds crazy. Like, he's
right.
Talking to candles. Like what is that? You know? So, and then we have another question. Option on swing trading. You're talking to the guy itself right here. Like,
right.
I love swing trading. Like, it's the best. You know, you
Swing
don't need
man.
I would say like I'm more of like aggressive trader, especially when it comes to swings. And, you know, I love just to get into a multiple trade setups. Not just because I'm also giving out trade ideas, but I love swing trading. It's the best. And, you know, you don't need to be on your charts heavy, check it every 4 or 5 hours and be like, yeah, you know, I'm living my life and controlling it and having the freedom to do what I want. So if that answers your question, but yeah.
Yeah, I like it because it gives you that ability. Like I kind of like the rush.
Mm-hmm.
You know, when you're sitting there and everybody hates drawdown, but sometimes that can become exciting when it starts. Man, you see that drawdown minimizing, and then all of a sudden it's going red, blue, red, blue, red, blue, and then feeling. Boom, it just goes into all blue.
I can even talk about like
it's so satisfying.
Yeah, I think it was even this morning, like when I told everyone to buy US 30 and it came down. It was like everyone was in like, you know, if anyone took it, was in heavy profit. Came down, created a nice low high, and then came all the way back down to create a double bottom. Mm-hmm. You know, and for people that knew where the price rejection on the wicks could have just capitalized on it, you knowing that this is still a bullish trend, right? So creating a nice high low for the overall market structure, and then it's just going to completely take off. So, and then now we're just going to see up to New York session, capitalize and be done with the week, and then ride it. So,
well, and if anybody feels comfortable with the US 30, you know, and the Dow Jones market itself, they've watched it, they understand that all it's been doing is coming down to go up and make new highs. Yeah. So all this is something that needed to happen. You know, shout out, what was it? Boeing.
It's been so like overdue. Like when I'm talking about like not rushing your trades like for the whole month, like you technically only need like 5 trades in a month. If you wait for the good setups, you capitalize a whole momentum of the trade and you'll be good. Like, you know, like, so that's why I don't understand like why a lot of people feel like, all right, yeah, I understand, you know, every day is a new market, right? Especially for the beginners, which is completely understandable. But like for the people that's been trading for a long time, like you don't need to be doing that anymore. Like you should know the concept. Like, you know, if you want to become a day trader, cool, you're in and you're out. You know, if you want to be a swing trader, capture a lot of pips, more money, cool. You know, I want to get to the point that I'm only trading once a year. That's goals. Like, you know, that's a high standards, trading off the daily time frame and higher.
Right.
So, and then you're like, man, a couple millions here, all right, cool, and then you can go on and focus on the next month. So that's when you have all the fundamentals into play and you've been trading for a while and having that experience and seeing all the trials and errors. So, and that makes you become the best trader within yourself.
Yep. It's like you going to the gym, bro.
Yeah, you gotta take one day at a time, You can't control the gains, but you gotta get the gains.
Right.
So.
Right. I'm with you.
When US30 gonna drop from the all-time high? No.
It's at an all-time high right now, so it's still going up.
Yeah, it's still going up. So.
I don't think we're gonna see another December.
No,
maybe
if
later
we
this
see
year.
like some dramatic news with Donald Trump, doing something really don't, because if we really drop, we're heading into a major recession. So like for the people that are having jobs, whoo, man,
I hope they're gonna start trading Forex.
You better start learning, because.
Signups are gonna quadruple in like overnight at some point.
It sucks, for the people that be like, I work and put all my eggs in one basket, which I highly believe people should not be doing. Mm-hmm. This is a skill set that if we go into war, we could capitalize on it.
Yep.
Like, it sounds very fucked up, but
it's true though.
You could be the other person, behind the fence and be like, look at me. Like, you show them your MT4 and it's just like, wow.
Driving past the unemployment line,
like
oh, you guys good?
Yeah, like I'm not throwing any shade to
right. I don't mean to laugh at that.
Are working, but it's just there's more to life than just keeping your eggs in one basket. Stop being afraid to take risks. You're young now. Capitalize on that. Reinvest what you made and keep reinvesting. So and that's how you really become successful. Using this vehicle the right ways.
What do they say? Millionaires have 7 different ways of making money.
Yeah,
at least 7.
Just keep investing. And that's how, honestly, that's how life hack. That's how you avoid paying taxes so much. You have everything as a write off.
Yep, open businesses.
Yep. So I know we'll probably dive into life talks, but we really wanted to keep it fundamentals. So that's what happens when you get Micah going.
Hey,
man.
I'm philosophical sometimes. What can I say?
All right, guys. So if you guys have any further questions that's on my live, answer them now before we're going to wrap this up. What do you think we should talk for episode 5?
I don't know. We got a week for that.
Yeah.
So.
Yeah, that should be really interesting. All right. So we're going to end this episode 4. Fundamentals of trading.
Episode 4.
And yeah, it's gonna get really spicy, guys. Really spicy. Woo! Bro, no, everyone laughs when I say it. Like,
because that's your trademark.
Yeah, when y'all see your MT4 all blue, you're like, well, it's a good day.
Yep, absolutely. Or when you're trading the peso with the red or the green sauce.
Oh man.